Again, grade 11, we are still looking at inventory systems. Okay, we've got Manyaka Traders. The following information for June 2021 relates to Manyaka Traders. The periodic inventory system is in use and the markup on the cost is 25%. The requirements calculate the cost of sales. We are also required to calculate the gross profit. Okay, these are the transactions up to number 2. Okay, here they supposed to write 1 July 2021 up to 30 June, I'm sure 2021, maybe 2020. That was an error. Was the year, if the year ends on 30 June 2021, it means it began on 1 July 2020. Okay, so we've got the stock on hand at the beginning and then the stock on hand at the end. Remember here I said it's supposed to be 1 July 2020 and then the end of the year is 30 June 2021. But anyway, I want you just to understand that this is the opening stock, this is the closing stock. Okay, so every time when we are required to calculate the cost of sales, okay, we always start by identifying our opening stock if it is given. Like in this question, we have the opening stock. Okay, so the opening stock is given, and then the opening stock is given as 105,000. 105,000 is our opening stock, and then we add the purchases. But don't forget to adjust the purchases for returns. Okay, let's go to the transactions that are given from the second. They say purchase merchandise from Broncos Limited, 35,000 was transferred to their current account. Okay, they transferred 35,000 to the account of Broncos Limited for the purchase of merchandise. Okay, all right, so we've got 35,000 value of merchandise. Okay, what else do we have besides that 35,000? We also have on the 7th purchase merchandise on credit from Mohasho wholesalers for 105,000. Attached the invoice is the delivery charges of 1,000. The delivery charges, remember, for purchases we call them carriage on purchases, and by now I'm sure we know how to deal with the carriage on purchases. So let's deal with the purchases first. We have got the cash ones for 35,000 plus the credit ones for 105,000. Okay, do we have any returns? Let's go to the question and see. Okay, on the 14th, returned merchandise to Mohasho wholesalers, cost price 4,000. So we're going to say minus 4,000. Okay, so 35,000 plus 105,000 minus 4,000. I'm sure I'll remain with something like 136,000. Okay, so 136,000 are our purchases. After the purchases, we go on to the carriage. We have got carriages, the transportation, for the delivery charges for those items that were purchased from Mohasho wholesalers. Okay, which is 1,000 rand. A carriage on purchases. Okay, the carriage on purchases are valued at 1,000 rand. They are only 1,000 rand. Okay, so it's 1,000 rand. What else do we have? That is all. So the next thing is for us to calculate the costs of goods available for sale. Okay, how do we get the cost of goods available for sale? Opening stock, add purchases, add carriages. Okay, so if we add everything that is here, we are going to remain with something like 242,000. 242,000. Okay, the last thing that is left for our cost of sales, it is to record our closing stock. Our closing stock is the amount that is given on the 30th of June 2021, which is 140,000. Okay, so when we subtract 242 minus 140,000, we are going to remain with 102,000. 102,000. And remember, the cost of sales, put brackets all the time. It will guide you so that you do not end up adding it. Okay, so our cost of sales are 102,000. The second part of the question, they want us to calculate the gross profit. Now that we've got our cost of sales, then we can safely calculate the gross profit. We are given sales. For us to calculate gross profit, okay, remember we need sales. Okay, we need the sales. How much are the sales from the information that we are given? Okay, we are given a sold goods on credit for 90,000, and then we also have got sold goods for cash for 30,000. Okay, so we have got those sales and then these sales, and then we'll also check to see if there's anything else that is going to affect our sales. So we're going to say 90,000. Okay, 90,000 for the credits. Okay, plus, okay, let's go back here on number, okay, on 23, on the 23rd, they said sold goods for cash. They have not given us the selling price, they gave us the cost price. Therefore, we need to go back to the markup. The markup is 25%. So the selling price is we are supposed to include 25% markup on this cost price so that we can have the selling price. So this is how we're going to do the calculation. Okay, we're going to do the calculation like the plus. I'll open a bracket here, 30,000, okay, multiplied by 125 over 100, because the markup is 25%, is it? Okay, so when you say 90,000 plus, okay, 30,000 times 125 over 100, it will give us something like 37,500. So we add it to 90,000, which is going to give us something like 126. Okay, we also have, okay, we are going to minus a minus, okay, there is a transaction on number two, on the 28th, NID returned the goods for 1,200. Okay, 1,200 goods were returned. Is it from the 10th, from the item that were purchased on credit here? So we call those what? Debtors allowances. Remember, debtors allowances always reduce our sales. So minus 1,200. Okay, this is the whole adjustment that we're supposed to do. So it's 90,000 plus 37,500 minus 1,200, which will leave us with 126,300. 126,300. These are our sales. Then our cost of sales, we say minus cost of sales. Cost of sales. The cost of sales are these ones that are given here. These are our cost of sales. Our cost of sales are 102,000. Okay, so when you subtract 102,000 from 126,300, we are going to remain with 24,300. 24,300 is our gross profit. Okay, that is all for this activity. I hope, okay, you are getting to understand how to calculate the cost of sales, and also you have managed to understand how we calculate gross profit using the periodic, for a business that uses the periodic inventory system. Thank you.